Good morning. So let me just drop this link in a couple different places and then we will begin. Click on videos, go here, get rid of that, and just drop this in a couple spots and then we are good to go. Good shareable link. Click it down here. And let's just see what's going on the Twitterverse. Drop it in there. Go from there. So futures are coming back a little bit. Once that economic data was released, I thought that might do it, might get us back a little. But we kind of have to see what happens. Housing starts came down 14.4%. That's not really what you want to see. Jobless claims, actually more people are looking for a job. So that's good. Go here. And go from there. Hold on one second. And housing data and claims live. Do this SPY, and then we just put this little link in here, and then I'm ready to go. All right, and we're golden. All right, good morning. So let's take a look at what's going on out there. I mean, we just jump into anything. There's so much to go over, but I'll start with the questions. Yep, I think you have a little bit of a rug pull, to say the least. Kind of take a look at what's going on here. I mean, it's not overly surprising. Look, this is where you closed, right at this level. Hold on. I mean, this is where you closed, right at the 5. So if you get rid of this data, that's where you closed. So it's not overly surprising that we are having somewhat of a pullback. Now, whether that pullback continues all day or doesn't continue all day really needs to be, looked at. For me, what I would focus on is just the data and what's coming out. And that data is not overly bad. But let's take a look at this. And let's get rid of these indicators. And let's look at this on let's just do 2 minutes to get rid of some of the noise. So this is where you're at. This is where you were at 4 o'clock this morning when Russia decided to do what they did. And now what you're doing is, this was resistance. Resistance has flipped to what? Support. And you can see how that has happened there, right? So whoever was selling here or buying here, right, they are back. And we're pushing up, and you're seeing that over here where we were down over 2.5%. Now we're pushing higher, and that could absolutely happen where we could actually even gap fill today. So nothing is out of the realm of possibility for me here. And I would not be shorting this morning. I want to be really clear about that. If you look at what's going on this morning, you came back down to major support levels and you've been rallying ever since. So there's very little that I would suggest doing here on the short side. I would be leaning long, and I will be leaning long. The only sector that really bothers me today is the one that I've been doing the best with is energy. What Russia did is really going to put a damper on this. This was the last pin, as I said last night in the free newsletter. If you don't get the free newsletter, there's a link in the description. But you're breaking this 50. That's not what you want to see. It's not. So that's enough. I'd stay out of the way just because with oil, my concern is these talks, they're going to lead to something. They're going to lead to less sanctions or peace talks, or how are we going to get to some level of peace? And that's really the larger concern, right? How are you going to get to peace? And that's what they have to be focusing on. And it seems like they're finally starting to focus on that. So I think that could really hurt crude now. I've been watching these talks all week, them talking about it, going back and forth. And something to pay attention to. So now you're seeing people step up and you're seeing people buy this morning. So, certain stocks on these pullbacks. I mean, we're not down as much as we were at all. This bounced $6-7 already. This being Tesla. So I'd be real careful with the whole I got a short here theory. Very well could roll again, of course, but I'd be really careful with that thought process. And I'd be more of a buyer of this dip than anything else. I don't see a need to do anything pre-market. I would just wait and see how we open and how we trade. Let's keep going. Huge SPY buying volume. Can you tell me the same way? Yeah, I think people are looking at this and going, that's enough. Like, he's got it. For me, what I think is doing it, Paul, is the fact that he actually came out and said, this is my thought on it, that he actually came out and was like, okay, we have a real problem. I'm going to address it as a real problem. And they haven't really been doing that, right? They've kind of been putting their head in the sand a little bit. I think that's why you saw this huge volume spike yesterday and you saw the volume you haven't seen in 30 days. So, whether they're buying the SPY and then buying puts against it, I don't know. There was a lot of put buying yesterday too. Are they buying puts because the market's going down, or are they buying puts against their equity positions? You really have no idea what the heck they're doing. Like, we just don't know. So we kind of have to figure that part of it out. But in regards to what you're saying, yes, that was decent buying yesterday. I mean, if you come across here and just look at it from that perspective, all right, I mean, you haven't had buying like this since early May, right? That was the most buying you've had. And I think a lot of it, this is conjecture. This is my opinion. I think a lot of it was predicated upon what you're seeing going on out there with the confidence. Like, I think he gave people confidence yesterday that they are in decent hands. I have my own opinion of this whole Fed group. I think they're awful, but he did sound way more like, hey, I understand we have a real problem here. I'm focused on the problem. And we really haven't had that from him in some time. So I'm happy with it. I'm happy with how it went, and we'll see how it goes. So that's all I can say about it. I think that's what did it. I mean, if you looked across the board yesterday, here, I'll show you, Paul. Let me show you this, because this is somewhat interesting. To me, it is anyway, but I'm kind of like a nerd. So you saw this crack yesterday, right? But like all these other sectors, all right, like here, like look, all right, they all rallied like big time. All these sectors rallied, right? Utilities sold down because people didn't want to be in them, but you rallied. Now, XLP, that sold down. Healthcare, that went up. Like all these sectors yesterday rallied. Now, we don't know where we open. So I could actually get rid of this. But if you take a look at that, it's worth paying attention to that you have dojis here on all these positions. And those dojis got you right to that level. So this is like the easiest trade in the world for me to understand, like, hey, nothing's been decided here. We're right against this level. Let's start looking for what stocks are above their 5-day, or any of these above their 5-day. Do you see where I'm going with this? Hopefully you see where I'm going with this. So what's above their 5-day? Well, this seems like it got the highest above its 5-day, right? So if you kind of go through it from that standpoint, look for relative strength, right? Comparatively, where do you have it? Real REITs, tech. So I would focus on that, and I would use that, like which one's touching that. So to me, technology looks like it could bounce, right? Because you're way over, that bar's a little thicker. I'm into the gap. Technology could bounce. What else could bounce? This looks like it could bounce. So they're the two that I would focus on. And I think that's where the buying came from. But that's my thought on it. FDX short, should the rally in a bear market? I don't know. You seem heck bent on wanting to short it. I would not be shorting dividend yielding stocks. I mean, if you want to short it, go for it. I don't know what to tell you. You wanted to short it yesterday. That really wouldn't have worked. That's where you'd short it if you wanted to short it. Right there. You'd have to short it if it breaks, right? And you have to short it off the open. And there's no way to use anything but the close of the previous day as your stop, right? So if you got above like $1 above the close, that has to be your stop. So that's kind of where you're at. So you have about $5-6 of risk there if you really want to short it. I don't know why you want to short a stock with this kind of volume above the 50-day, above the 5, above major support, right? Breaking its downward trend line, raising its dividend, and just added 3 new board members that are geared towards shareholder appreciation. I mean, I can give you 1,000 other names that are a better short than this. So that's why I wouldn't short that. But if you want to, go for it. What's going on, Chuck? Thoughts after yesterday about adding Amazon shares? Well, I think you have to be real careful on adding Amazon shares. That's kind of where my head is with it. So, here's where I would go. Let's take a look. I'd be really careful shorting Amazon here. I'd be really careful shorting anything here until you get a firm move on which way we're going, right? And I don't think you have anything yet on which way you're going. I really don't. So if you have questions, just put them in the queue. I'm more than happy to answer anything, stock related. But before I get weird questions, but right here, this level and what you're seeing going on here on Amazon, maybe you can short it. I don't know. I mean, I don't really see I don't really see the need to. Let me pull this back because I do want to show you this one name that keeps coming across. Hold on 1 second. That's wrong. Bear with me. Yeah. Hindenburg put out a short on this. I'm just seeing if it's bidding up at all. It's not. So, I wouldn't go near it until it bids up. Yeah, you see how you're riding right here and how that's playing out? So that's definitely something that needs to be addressed. Yeah, I would watch this whole level. I'd be really careful here, shorting that. So I actually am long calls, leaps, but I have a completely different thought about it. I just don't know that I'd be in a big hurry to short that here. I really don't know that. I would just watch that really closely before I get involved in shorting that name. I mean, there's so many other names to look at shorting. I don't know, man. I don't know that I would be shorting that. I'm not saying you're wrong. I just think there's better names to short, I guess. Like for me, these coal names are a no-brainer. Like if we're going to roll, if energy is really going to roll, these names are going to get hammered. They are so leveraged to oil prices that there's just no way that they can sustain themselves. So I do think that these names can crack, and that's definitely something that I would be looking at. So yeah, I mean, that's where my head would be. Do I really want to short the world's largest retailer? I mean, it does look awful, right? But I mean, what are we down? What are you down from the high? All right, so you're probably going down what, 50%? I mean, if you're looking for 10 points, let's say you're going to go 50%. Do we really think that Amazon's going to lose 80% of its value, right? So probably not, right? I don't think it will. Maybe you do think it will. But I mean, maybe you go to 90, maybe. I don't really care. I'll buy more leaps. but I can't imagine that this is going to stay down going into the Christmas season. I just don't see it. So I think we're going to rally into September, November at a minimum. That's where my head is, but we're going to have to see. I just don't see how it can't happen, but we'll see. Oh, you're welcome. My pleasure. I'm having a fun time doing it. Well, Snap was downgraded today, right? $17 target price. So you're going to see some pressure on that. I think the banks are already too depressed to short. I could be wrong. Snap has some real issues. The downgrade is somewhat concerning. The downgrade that here, I could see Snap going to $8. This is pretty easy short. I mean, you could this is not a position that I would short because I'm in no man's land, right? So you want to make sure you're below this level if you're going to short it, 1255. You want to make sure that you want to use the top of that as your stop, 1343. So there's a buck roughly what you're looking at. So you want to make sure you're under the 1255 level before you short. And you want to make sure that you're using the 1343 as your stop. 1350, you could say, if you're worried about just getting stopped out before it goes lower. But that's what I would use. And then see what it does at 1188. I don't know that I would wait till 1188. The best would be is if you got a small bar here and then broke lower. That would be your best trade. That would be your best trade. Intel, I mean, I think you're late to the party there, brother. I mean, I really do. I think you're really late to the party. I mean, where's Intel going? I mean, where that's what you have to start thinking about, where are these names really going? So if all right, so we're going to say that this is the high, right here, right? So let's get rid of that one. We'll get rid of that one in a minute. So here's your peak, right? So now 31%. Are you going down 50%? Are these names going down to that level? Is that going to happen? Is the SOX going to break? It might, right? The SOX breaks, Intel's done. I mean, Intel's not the leader, right? They're more of a foundry than anything. I mean, that's where they're going. So I think it's a real issue. I definitely think it's an issue. And I think it's something that needs to be addressed. I don't know. I don't know that I would be shorting that. Please like this video. It helps me with the algorithm. I saw 40 likes yesterday. The likes are free. You don't get charged for them. Thanks. I don't know that I'd be shorting that here, man. I really don't. I would hold off on that. What else do you have? BAC. I think you're late to the party on a lot of these. I think you should be looking at, I'm not saying that's going up. There's no one's going to look at that and say you're going up, right? But you're kind of rounded off already. We kind of know that we already know that this recession's out there, right? They know they're going to drive us into a recession. They know this, right? They're just trying not to do it because the Fed got political and they shouldn't have. But this is fairly, clear to me. Now you can kind of look at this and see where that trend is, how you popped out of it here, but you can see that trend line right there. I mean, I'm not going to suggest that this is here, right? You could say that, but I see more action tighter where I was, right? So, I mean, if you clone these, right, and this is kind of advanced, you can actually get a median line in your channel, right? You pretty much have one there. Median, obviously middle, but if you look at that trajectory, it gives you the levels that you should be focused on. And I'm near this one. So do I really want to short this for a couple of dollars? I mean, it looks awful. Don't get me wrong. If you open here and you go over these green bars, you trapped everybody. Everybody's stuck and they're going to want to sell, right? You went in yesterday, you were feeling good about yourself. You went home with some longs yesterday, right? And you went from there. Even in the trading room, I mean, we had TQQ. We were up in it. Some people held. Some people locked the portion in, whatever. And now we're dealing with this nonsense this morning, right? That's the tape you're in. There's very little you're going to do about that. And, nobody had on their bingo card Russia cutting off, natural gas today. So I think you kind of have to keep that into account on what's going on. But you're seeing a lot of, like, if you're seeing the banks get hit, right? Like you're talking about like BAC, you kind of have to understand why that would happen. It's going to happen because lower loans, right? People are going to get less loans, right? You're going to see names like NVR get hit. Okay, these are your real estate mortgages. If mortgages aren't working, and I don't think they're going to work, then these are going to have problems. So something to think about. It's all connected. I just think you're really late to the party. I don't really want to short something that's down this much, like, because Bank of America does not have fundamental problems, right? Like when I'm saying, and that's what I keep going through. Like when I talk about names like Peloton, I mean, to me, that's a zero, right? I've been talking about that when people were back here saying, oh, it's going to get bought. We actually were starting to short it up here. But if you start looking at some of these names, I mean, the majority, like I say, that's going to go to $1. I mean, there are fundamental issues out there. UPST has these loans on the books, $250 million in loans they can't sell. So they put them on their books. I mean, that's not what they were supposed to be. They were not supposed to be a lender. They were supposed to be a facilitator, right? So when you start seeing cracks in your fundamental business model, that makes sense to stay short, even though you've dropped from, you're down 90%. What doesn't make sense is this. Like, did the fundamental story of banks change? Probably not, right? So that's kind of where my head would be with that. So I would hold off on those bird feeder. I would look for greener pastures. Oh, you're welcome, brother. Maybe you're right. Maybe FDX does go down. It looks like ass, excuse my language, but it looks awful. It looks absolutely awful. And I apologize for the language, but on one of those days. It's annoying because it's just one of those things where you just see it. Like, look how it's going. It's not going well. And it's oil that's going to crack. And then it's really coal that's going to get hit the hardest. The coal names are going to get crushed, in my opinion. But this is not good. You need to bounce here. And I don't think you're going to bounce here. I think that this is too high. Like, if I'm looking at this is way too high, right? We're gone through this. You're on the other side of the 21. Let me just show you this. So you're on the other side of the 21, which means I'm on the other side of the Bollinger Bands, right? So I'm going to start riding this band down. These are going to start turning. They're getting wider, right? This is like the exact opposite of what you want to say. I don't want these wider as I'm going down. You follow me? Because that tells me that we could just ride this line down, just like you ride them here, right? They get tighter and tighter, and then you're setting up for a move. When they get wider, you're setting up for a move. This is setting up for a move to the downside. So that doesn't really light the world on fire to me. Now, there's some good things about it. You're still above the cloud, and hopefully you stay above the cloud. You really, since you've gotten above it, you went into it, but you never really broke it. I don't know how bad it gets for oil. I really don't. But I know that there's a real issue out there now. If they have these peace talks, I mean, there's a reason NATO said something this week. There's a reason 3 of the world's leaders are in Ukraine right now, taking photos and shaking hands, and explaining to Zelensky that that's enough. Okay, we need to get back to business. We can't have a war right now. The economies are bad, and we all want to get reelected. So there's a reason for that. Those meetings, okay? And there's a reason why Biden said what he said. So about, like, this needs to wrap up. Keep that in mind. So I think it looks awful. It's not triple witching tomorrow. It's quadruple witching, which is going to be vicious. Quadruple witching is vicious. Okay, you have 4 asset classes that expire tomorrow, not 3. Happens 4 times a year. The one you're missing is stock index futures, which is very important. But there's 4 tomorrow, brother. I mean, I tweeted something out, Paul, about this, where they are raising prices, right? I actually view it as a good thing they're raising prices. Now, it might not be a good thing they're raising prices because the question I posed, are they doing it because of demand or are they doing it because of costs? Now, Ford issued a statement today and said, what? Wow, that Mach-E, we sold it like hotcakes, but we didn't make any money off of it because costs were too high. So now we're selling EVs that we're not making money on. How long do you think that Ford's going to sell cars that they're not making money on? Right? So if they're having issues, and don't get me wrong, Tesla has a much better model, right, as far for cost structure. So the question becomes, what do you do with that? For me, I think you have to look at it and say, okay, what are we going to do here? I think it's pretty clear what you do here is you just kind of see if it holds that 635 level, see if you bounce around. If you don't hold 635, you hold 621. I mean, there's nothing redeeming about this that says you have to jump into this right now. Nothing. There's nothing that's screaming at me that I need to dollar cost average into that. I would be very concerned just because of this. So this would be my concern. All right. I'm earning $3 a share. Now let's just do the math. Okay. So a year ago, we were doing $1 a share. So let's just say that I'm going to do $40 a share. Okay. Where am I, which we're not going to do. No one's even estimating that this is going to grow at 100%, right? No one's even estimating the number I just gave you, right? You know, the highest estimate on the street, I just gave you something higher. All right. If you're a car company and, you know, you're not going to continue to grow at 100%, what multiple should you really have? Should you be at 10, 12? Average is 14, 15 right now in the S&P. I mean, that puts the stock, if you doubled earnings, it puts, you see where I'm going with this? Like if you doubled earnings, it puts the stock at $600 with a 15 multiple. If earnings go up 100% next year. So I don't think they're going up 100% next year. So I really don't think that they are. I think you're seeing cracks across the board in the larger names. Now, completely different business, but here, let me show you what I'm talking about. All right. So no matter what quarter, besides when you hit the pandemic, see these numbers and how they're all going up, doesn't matter. Seasonality didn't matter. Nothing mattered. What happened here? First lower low you had in 2 years. So, I mean, I understand it's a completely different model, but you're seeing cracks like that in the major companies. And that's because of the economy. And to think that Tesla is not going to be affected. I mean, look, when people are struggling to meet their bills and pay their rent, okay, you're not going out there and buying a $50,000 or $100,000 Tesla and say, I need a Cybertruck for the zombie apocalypse. Like you're ringing in the purse strings a little bit. So I think that they're going to be just as affected, and they are retail, and they are one of the highest trading stocks out there. And you do have a death cross. So I wouldn't be in a big hurry to do anything but trade that. That's really where my head would be. You know, make sure that they have what they need. Let's go here right now. Keep going. So I hope that answers your question. Long answer, but hey, Viv, I would watch them. It's not something I'd be jumping into right here. I like them long term. Like the one I always buy is this Goldman, but you know, I'm not making any money with it. You know, I bought some at 330. I bought some at 300. I'll buy some more at 275. You know, I'll buy it probably like every 25 down roughly is kind of where my head is with it, just for the heck of it. And then I just sock it away and I just wait. And my hope is that it gets down to here, right? Or maybe I get lucky and I even get to here and I just keep averaging into it the whole way down. This is the one I always buy because they're the best. But this is telling you exactly what's going on that institutions are selling. And until that changes, right? Even if you got rid of this here, I mean, and you always clone these because you're looking for the trajectory. Right? Say it. So I'm at that lower end. So maybe I bounce here. That's what I was trying to talk about. Bank of America, same thing. Like you're kind of near the low end. We get it. They're going to raise rates. Inflation is becoming more entrenched. We have more chance of a recession. I don't think anybody doubts that there's going to be a recession. I actually think that we're already in it. The fact that people think that we're selling off because of recession fears is silly. We're selling off because of what triggered last night in Europe with Russia. And I actually think European leaders saw it coming. I think that's why they're where they are. I think there's high level talks that we're obviously no one's really aware of, but you're holding that level, right? So let's go back and take a look at where does that level come from? Well, let's go take a look at a weekly chart. All right. So this is major support. Okay, going back 5 years. So that's what I would focus on. All right. That's where my head would be. Hey, good morning, Ahmed. What's going on, Utu? ISM. Small mid cap ESG. I would be really careful with this stuff. Anything ESG related, I would probably be short. A lot of these ESGs are they're underperforming so much that people are just kind of sick of it. The fees associated with these are usually like double what the fees are with other ETFs, the ESG fees. It's just branding, and everybody has an ESG ETF, but the majority of them are starting to buy oil names and sell like Tesla, right? So you're not really ESG. And a lot of people are saying that, like, you're not ESG and your stocks aren't working. So it's fine to be ESG when everything's working. When everything's not working and you're underperforming, it's not okay. So if you read a lot of articles right now about how people are reallocating funds, they're blowing this stuff out. So I think that you could see outflows, and that would concern me. And I'd watch that 200-day moving average. So I would be on the short side of that. You probably go back down to 20. Is what I think is going to happen with something like that. I would be in a big hurry there. IWM, TQQ, sure. So I would be leaning towards buying these. I think you have to kind of just watch what's going on here. That's the weekly. That's not what you want to see at all. You're just being walked down over and over again, right? So you really shouldn't be in a big hurry to do anything but trade small short-term trades, which is really what we've been focused on. You're trying to hold that level. You have to start somewhere. Let me just clone this line. So I have one here, and you can see that level right here, right? Got above it once, and that's it. So there's your range. So you're trying to establish a range, right? You've been in the same range for a month now. So that's pretty good, right? Hopefully you can see that right here, right? I mean, you can actually see that you've been in it since back here. But in that range, I mean, you really haven't left that range in a month, right? So I kind of like that. Now, you look at TNA. I mean, to me, this is where you buy TNA and you hope it holds, right? You buy it and then you go, okay, well, the low is 32.25. So if I break 32.25, I hit a new low. You see where I'm going? Like, you literally are buying TNA for 25 cents, right, of risk. So, I mean, to me, it's like a no-brainer trade to do that. Because if you're right and you could pick it off and make like $3 or $4, I mean, why wouldn't you? It's 20 cents. It's a no-brainer. If you take out the low, get out of the way. Actually, if you take out the low, what you do is just reverse the trade and buy TZA, right? Which I would not be buying this morning. I would not be buying this up the way it is, right? Because this is really where you start running into a problem, just like we saw in May, right? And you can see the problem with these types of funds. This is where you were when you were at the same point a month ago. You were at 51. Now you're at 48. Well, why the difference? Well, the difference is the cost structure of those, right? That's why I'm always so big on shorting these versus going long, because the cost structure is so expensive. That said, I like this, and I'd probably be on the other side of the trade trying to buy that, quite frankly. TQQ. Yep, we're just got to watch how it opens. I don't know if you took any off yesterday or not. Let's assume that you didn't. It's not where you want to be at all this morning. We're going to gap down below the stop. It is what it is. We did not want to see that. We were looking for 24. We're at 23. So you have to watch this morning. I would tell you that if you took out, like if I took out the post or the pre-market futures level, if I took out 2260, that would be a concern of mine. Oh, that EBIX, they never really rallied, did it? They're just pummeling it this morning. So, So that's what I would look at. Anyway, no, I like biotech, but I don't see anything out there. I ran through the whole gambit last night. I didn't see anything that like jumped out at me. I mean, for me, this is just a trade that the world's not ending. Give me 1 second. Sorry about that. Getting a little more coffee. Um, for me, that's all it is. It's just a trade that it's just a trade that the world's not ending. I don't really see the sense in going crazy on the individual names here. It's more a sense of I think that this could hold, and I think it's possibly beginning the bottoming process, but we'll find out real quick, right? I mean, you're going to find out really quick here. We picked that off. We got a good price on it, and it worked. But now we're dealing with this. So now we kind of have to see how that plays out. And I'm not so sure that it's going to work, right? You're bottom fishing. So when you're bottom fishing, you have a low probability. So just keep that in mind. To me, I would be doing very, very little here. I'd be doing very, very little. I would not be going short here. I mean, I can't stress that enough. You're down 3% on the indexes. This is not where you short names, right? You short yesterday, but you'd have to think whether or not we're down because of Russia or you're down because of recession. It doesn't really matter, right? I mean, to me, I think it's pretty clear because you can see what's going on with oil and you can see what's going on with natural gas, right? I mean, there's a reason that this is going on, and maybe I should show that real quick so you guys get it. But like here, this is one we did in the trading room. We actually did fairly well with the trade. We bought it this day like 73. You're at 89, but natural gas is moving up because of what Russia did. You're up 10% on oil, which is levered. If you just look at UNG, you're probably up half that, right? So you can see what's going on here. I mean, this was a no-brainer. To me, this was a no-brainer trade. Natural gas, they can turn on and off in no time. It can't be stored, right? That's not true. It can be stored, but they're getting it via pipelines, right? So you turn it spigot off, you turn the spigot on. So, Europe's in a really precarious position. A lot of this was not very well thought out. That's all I can say. And, they seem to be figuring that out now. But that said, I think you kind of have to see what's going on here and look at the moving parts. Now you look at something like that, and then you look at energy down, going, why is energy down? Well, energy is down because you don't need oil, right? If your car's out of gas, you can't run and go stick crude oil in the engine. It's not going to run, right? Same thing with natural gas. So that would keep me, very particular about what I'm doing here. Cameron. Yep. Make sure that you do like this and subscribe to the channel, because unless you're subscribed, I do put out private videos, and the only way you're going to see those is if you are subscribed. So I just think that you have to be really careful shorting this far down. I'm not saying we can't go lower. Look, we went to levels during 2000, 2008 that you just don't see. But you're getting to a point where you're getting washed out, where it's just getting exhausting. Like, people are tired of selling. And that's what's going to happen here. People are going to get tired. They're just going to get sick and tired of selling. So just keep that in mind. Again, as I stated earlier, it's quad witching. But yeah, I mean, why would you want to be putting on a ton of longs or shorts going in the quad witching? You wouldn't. So, yep, please hit the like button. I wouldn't be buying Shop here. Shop has fundamental issues. People aren't selling on there as much. People aren't using them as much. They have more competition. I think that the stock's going to get absolutely hammered. This going to double digits would not surprise me in the least. Not in the least. I mean, this was probably one of the easiest shorts in the world that I just stayed away from. But I mean, you're down 80% already, and you're probably going lower. So it would not surprise me to see this at like 90, 100, something like that. So they won't rally because of that. It's a longer answer, but it's something to think about. But they won't rally because of that. Oh, welcome aboard, buddy. What's going on, Jack? Rivian. Yep. So I do agree with what Musk said. I do think that they go bankrupt. I don't see how they don't go bankrupt. It makes a lot more sense why Ford walked away up here. But it's one of those trades where you just have to kind of short and stay short because it's going to take forever. Right. But like you were down here in May, it's been a month and you're still down in the short. Right now it's up. Like, it's just a battleground where you just stay short and just keep it on. Someone could come out and buy them. I don't see it, but they have some massive problems. People like the trucks. Some people in the trading room drove them and liked them a lot, but I think it has massive, massive issues. Like their cost structure is just absolutely insane. When they were coming out and talking about how much money they had to raise and everything else, it's just crazy. So, yeah, it's not something I would be buying. I'd be shorting it. What's going on, Haley? I'd be out. I'd get out all three of those, Haley. I'm going to save you a lot of time. I'm not even going to look at charts. The Exxon trade, CVX, we've been out of for a week. Oxy, we've been out of for a week in the trading room. And Exxon will trigger today and this morning. And I'd be really careful in that space. Really careful in that space. So my sense of it is that globally they want this to end. So if they want this to end, it's a real issue. So, and just FYI, Lucid Air did it. You might want to know this, like why is the stock down 4%? They did a software update that left some of the cars actually inoperable. You couldn't even drive them. So that's not good. That's not going to really inspire confidence for their $100,000 car. All right. So, a lot of problems when you have a car company. Just keep that in mind. But I agree with what Elon's saying there, and whether you like him or hate him, I don't really care. But I do think that Lucid and Rivian are not in the same format. I'm not sure Lucid goes bankrupt because now they have Saudi money behind them. But we'll see what happens. But all three of those I'd be out of. I'm talking short term. Long term, I would not. If you're looking out years, you don't have to sell them. But other than that, I'd be out all three. Oxy actually just broke today. Looks like a short. Do I hold dividend stocks? Yes, but very different. But yes, I do. RDBX. So I think this stock's a little misunderstood. I keep making jokes about it with see that? And you got right to that level. That's what we talked about. Getting to that level, get in this box. We just talked about this. And that's what it did. Get in this box area, and that's where you buy it. And that worked. I think the stock's a little misunderstood. And I think it can go higher. I don't think people are really understanding that they're trying to come up with something that competes with Netflix. And it might work being cheaper and an alternative. So I have to spend more time really looking at it and drilling into it, but it definitely could work as an alternative. When people start looking at what they're spending, I was making jokes about the red box where they actually have a red box where you go pick up the DVDs, but Middle America is still doing that. So there might be more to this story. I have to do a lot of work on it, but negating it off the open or negating it from the beginning is probably not the right move. So, but maybe you can bounce, but now I'm in no man's land, so I wouldn't do that trade. I wouldn't do anything there. What's going on, Nad? Facebook, I think, has massive problems. I think it's very interesting what they're doing with, they changed it to Meta. We're going to pretend that we're not Facebook. Okay. So I think they have massive issues. They moved into a market that's going to be non-existent. Okay, this whole metaverse thing with the NFTs and everything, right? No one's buying it anymore. I mean, you have like the tech heads that are looking at it, but that's about it. No one's thinking that they need to be in a metaverse right now. No one's thinking that they even want to be on social media. We're all on social media mostly because we have to be at this point, right? No one's like thrilled about it. So, these companies are just despised now. So I think they have real issues. I think that you're going to start seeing more people start really drilling into their balance sheets. And I think that's going to be a real issue. And that's something that they're going to have to deal with. And to me, I think that this will be double digits within a year. I think that, like, you have to think about it, right? He was great at creating a company. Okay. His purchases are okay. He bought well with Instagram. Like, he made some really good purchases. WhatsApp. He created Facebook, or right, someone else created Facebook, whatever. He's going to go out there and create a metaverse over the next 5 years. Like, no one's going to hang out and wait for that right now. And he's pouring all that money into it. What he should be doing is laying people off like everybody else is, or cutting costs some other way and trying to get ad revenue up. And then people would respond to that. What he's doing, people are not going to respond to. Nobody wants to hear that right now. NVIDIA, I have a hard time shorting here. I'm not saying it doesn't go lower, but I mean, what are you shorting, right? You're in the same, like, I just want to point this out to everyone so they get it. I'm going to have to jump here. You're in the same range that you've been in since May 12th. Nothing has really changed, right? I mean, if you go to May 12th, you had this up here. That's your range. Like, you are trying to base. That doesn't mean that you're not going to break and crack, but do you really want to be shorting here? I wouldn't. I'd actually be looking at long trades if I can get over the 5-day. If I can get over that 5-day, being long NVIDIA is very appealing to me. And it tried it yesterday, and it means it might try it again today. And the other name that I like a lot on that side as well is, I really think Tesla. Like, if you look at what Tesla did with the 5-day yesterday, it was the only one that, like, only real leader that crossed over it. You need to look for relative strength like that. Tomorrow's going to be vicious with quad witching, FYI. What's going on, Debazian? I'm short. I'm leaving them on until tomorrow. But I'm willing to let them go to zero, Jern. If you're not willing to do that, just cover them. I mean, you're probably, they're like $1.50 right now. I'd have to go look at where they're going to be off the open. I don't have that in front of me. I don't want to switch screens right now. But just cover them. I mean, you cover into the weakness if you're uncomfortable with them, right? I mean, we're probably down in them right now, but I'm not even really worried about them. So, cover them. Or if you think that you're in a better position, go long stock against them and trade stock against them to pull capital out. So EQRX. You can always go long stock, right? If you think it's going to bounce, pull $1 out, sell the stock, pay down your puts. I wouldn't go near that. I'd watch that 50-day. It would not be something I'd go near. And I need way more volume if I'm going to trade something that thin. PTLO, Sean, that's something I'd go near. I'm going to have to jump here. No, unless you're looking at shorting it. And even then, I'd let it get to the 50. Yeah, I think he's going to go through with that merger. The question really becomes price. I think you're okay buying that and sitting with it if you can wait out a year or two. But I think he actually addressed Twitter. So I do think that something's going to happen here. He's going to buy it. I find the lack of volume fascinating. I'll leave it at that. But yeah, you could buy this and hold on to it. I mean, look, the problem is if he walks away from it with where some of these others are trading, this thing's going to get crushed. So they want this deal to go through. Yeah, maybe, Shane. Maybe. DeLoreans were. All right, I got to jump. Everybody, trade to win today.